Okay, welcome to this particular presentation, and we are going to look at presumptive tax and turnover tax. Okay, who can tell me what the word presumptive means? Any idea?
Yes.
Yes?
You mentioned
Come again?
good market last time.
Come again?
This is hello. Can you get this?
I can't get you clearly.
What if it's a little you can't get?
Yes, please.
Yes, and you said this is tax is levied on transport.
This is tax which is?
These are levied on transport.
Okay. Okay, fine. Okay, for presumptive tax, is coming from the word presumption. Okay, it's more like an estimate. Okay, an estimated tax. Okay, what of turnover tax? Turnover tax is tax on sales, on a sales figure. That is what is turnover tax. Now, in a particular country or sovereign state, you find that the revenue authority tend to have challenges sometimes to collect tax. Some of the taxpayers are difficult to pay. Okay, they have challenges or they are just difficult to pay tax. So, particularly in Zambia, when you look at some taxpayers, those especially who are in the informal sector, you find that they are part of the group that is actually difficult to pay tax. Now, the government of the Republic of Zambia is under pressure normally to actually broaden the tax revenue so that it gives a breather to those very few who are paying tax in the formal sector. So, in a way, they have come up with a strategy to actually extend this tax net broader, to catch a broader area. So, to include some of the people who are difficult to pay in the informal sector. So, what government did is it looked at particularly those who are transport operators who are in the informal sector to see how they can manage to collect some revenue from these taxpayers. Okay, that's what they have looked at. So the presumptive tax is actually targeting transport operators of buses, minibuses, and taxis. Okay, so what the government did is it looked at the industry, this transport industry, and carried out a survey. Okay, and came up with a formulation of how much on average these particular transporters using particular vehicles are able to generate in terms of income or sales or revenue, okay, in a year. So this is what they base their calculation of how much they are supposed to pay for each one who has this type of transport. So meaning that they are assuming that everyone at least is getting that much per annum. Hence the term presumptive tax. Okay, hence the term presumptive tax. So now in this particular presentation, we are really going to look at how to identify persons liable to presumptive tax, explain reasons why there is presumptive tax on bus, minibus, and taxi operators, talk about benefits of presumptive tax over regular tax system. We also look at modalities of collecting presumptive tax. How do we identify persons on the other side who are liable to turnover tax? and also identify persons who are not liable to turnover tax, and how is the turnover tax paid, and also we look at the interaction of turnover tax, capital allowances, and business losses. So that is our area of focus. So at the end of this particular presentation, I expect you to have some insight in these areas I've just mentioned. So we get started. Okay. What is presumptive tax? Okay. So as I've already mentioned, you notice that presumptive tax is simply an estimate of tax payable, okay, that is used in dealing with incomes or activities that are hard to tax. Okay, that's what I've already been explaining. And normally, as I've already emphasized, this targets the informal sector. Okay, this targets the informal sector. So presumptive taxation offers a chance or possibility of reducing tax evasion at low cost and broadening the revenue base. So that's what presumptive tax tries to achieve. Okay, so let's look at what next we're looking at in this particular, why presumptive tax on buses, minibuses, and taxi operators. Why? Okay. Most of the transport businesses in Zambia find that they fall in the informal sector. If you look at the fleet of minibuses plying our routes, okay, the owners are classified to be in the informal sector, and these are kind of taxpayers who are difficult to tax. Okay, these are difficult to tax. Now, government's lack of comprehensive list of these particular potential taxpayers has forced them to devise a method that can be used to collect at least some revenue from these particular taxpayers, and that is where we see the presumptive tax squarely sitting. Okay, the administrative costs also of dealing with the numerous number of returns from these small taxpayers will be extremely high. Okay, imagine you look at the street vendors which used to ply our routes, especially when you look at Lusaka, for instance, the city of Lusaka in Zambia. It was inundated by traders on both sides of the road. Okay, and now that number of people, if they are to be filling in forms and sending them to ZRI, that will require ZRI to station more people to handle that type of forms or reports or returns. Okay, that will be extremely difficult and expensive for ZRI. Even if it's electronic system, there will be more manpower needed to look at these particular returns. So we say that the administrative costs will be unbearable. Okay, the informal sector business keeps also very poor records. So very few people have knowledge about the tax, and also we find that even the level of education, level literacy in that particular sector is quite low. Okay, so making it difficult for them to comply with the tax requirements. Okay, so that's why the presumptive tax, which is an estimate of how much they're supposed to pay, which enables the revenue to collect tax at low cost, was devised. Okay, so that's why presumptive tax is applied on minibuses, and taxis. Okay, some of the reasons why these people in the informal sector, especially as we are focusing on tax operator or transport operators, claim as to why they are failing to pay tax normally is as follows. One, they claim that there is a complicated tax procedure. Okay, there is a complicated tax procedure. That's what they claim. As most of the transfer find it difficult to remember and comply with these particular obligation under income tax, as I've said, which include filing returns and accounts by 21st June every year, also filing provisional tax return by 31st March of the charge year to which the returns relate, And C, paying provisional tax by 10th of month following the end of every quarter. Also settling any penalties and interest where applicable, and keeping up to date with business records at all times. So this becomes complicated for them. So they will rather avoid being involved with anything to do with revenue authority because of this type of demands on them. So they claim it's complicated procedure. So that's why I find that they are not willing to be involved or to involve themselves in paying this statutory tax. Okay, so we also move on to look at the other reason why they are failing to pay tax. Okay, one of them that has been found is that of low levels of tax literacy. You can see that a good number of potential actual taxpayers have low levels of literacy in this particular area of tax. So that makes it difficult for them to prepare records, business records, and fill in returns for tax purposes. Okay, so we also have an issue to do with high cost of hiring professionals to prepare accounts and handle tax for them. Even if we say that it's a complicated process, and by law you're supposed to pay tax in any way, forcing them to hire professional accountants to do this for them, most of them, their revenue gains are very low, okay, very small, such that the cost of hiring a professional accountant will be too much in their hands. So that's why you find that they again run away from paying tax. Okay, they run away from paying tax. What another reason can be looked at? The other reason is they claim liquidity problems. Okay, they claim that they have liquidity problems. So most of them you find that they argue that business is difficult for them, and they are just barely surviving to maintain their fleets. So they actually talk about constant breakdowns because they are not able to maintain fleet of buses properly because of liquidity problems. So even when it comes to paying tax with that type of complaints, they find it very hard for them to pay tax. So that's why they are claiming, that's why it's difficult to tax some of them. Okay, so we look at another challenge which they face. It is in form of constant breakdowns because of their businesses are small in terms of revenue generation. They cannot maintain a good running vehicles, and hence they have constant breakdowns, meaning they are going to make losses or encounter losses in terms of business, okay, operation. Okay, so that's what they claim. Okay, that's what they claim. Okay, now, as I've said, these reasons and other reasons have actually compelled the Revenue Authority to seek a different way on how to tax these people. Hence, they came up with a method of applying presumptive tax, whose main objective, as I've already been saying, is to increase compliance by simplifying tax processes which they are complaining about, and ultimately reduce transporters' compliance costs. So that's how it came about. That's how it came about. Okay. Now, what type of benefits are expected from this type of tax? Okay, presumptive tax. Upon being applied, it is expected that the presumptive tax will bring a simplified process for the taxpayers, whereby you have no filing of returns, you have no need for elaborate business records, and you also have predictable amount of tax to be paid. Hence, it assists or facilitates planning. So that's what happens. How does it come to that predictable amount of tax? We are going to be looking at tax tables for presumptive tax, where a fixed amount is already attached based on the seating capacity of a particular vehicle. So there is a certain expected amount that which a taxpayer is supposed to pay per vehicle. So that makes it predictable because you already know it beforehand. So that's what you need to know about that. What other thing can be talked about in this particular regard? We talk about cash flow friendly. Okay, it is a cash flow friendly system. Okay, since operators find it fairly easy to pay a whole range of fees on a daily basis, such as I've said, loading fees. If you look at our stations in Lusaka city of Zambia, at the bus station, when you observe how the buses operate or running, you find that every time a bus loads, a certain amount is supposed to be paid, and this amount is not so big to discourage the bus drivers or the people are involved, so they gladly pay. So borrowing or taking a leaf from that, even presumptive tax is not so much to cause some anxiety on the taxpayer. So it is said to be cash flow friendly. Okay. So we look at another reason why this one is proved to be beneficial. The aspect which is complained about is the dreaded professional accountants fees, which some organizations tend to pay. But in case of the presumptive tax, because you already know the figures in advance, and there are no need of the audit team from ZRI or Revenue Authority to come and visit you, since you are not required to keep records, then it actually eliminates the need for professional accountant services for them to come and prepare books for you. Since this is the simplified process, all you need is just to know how much you are supposed to pay per annum and no more records, okay, which are elaborate for the business. So again, that is what attracts taxpayers to be compliant with the Revenue Authority demands. Okay, we also look at another reason. We can say that there is equity. Okay, with presumptive tax there is equity. Okay, because the amount which is supposed to be paid is cash flow friendly, you find that everyone is going to pay this small amount or affordable amount without much problem. So everyone is not going to find it a challenge to pay tax. So you find that all transporters will be expected to play their part, hence no free riders. So there is no one who is going to look to others to pay on their behalf while they stay away. Everyone can afford this particular tax, therefore everyone will be on board to pay tax. So there are no free riders. The fifth reason is the presumptive tax gives allowance for breakdowns. Okay, the levies will only be charged for vehicles that are on the road during the charge year. So meaning that whenever your vehicle breaks down, you need to inform the Revenue Authority or relevant authority that your vehicle for that particular period is down. Okay, so that there is documentation to that effect, so that you don't pay tax when your vehicle is broken down as a transporter. So these are some of the reasons why this presumptive tax is beneficial to a taxpayer. Now there's a question that is frequently asked. Okay, question that is frequently asked. Does ZRA in this case still audit taxpayers' record under presumptive tax? Well, that's a question to be answered. As I already explained, from what I've explained, I've said that there is no need to keep elaborate documentation, because the figure which is supposed to be paid is well known. You can glean it from the tables. So as a presumptive tax is a levy, there is no need to keep records for tax purposes, and such no audit are conducted on transporter business. Otherwise, what are they going to be looking at? There's nothing to evaluate which is elaborate under this type of system in terms of accounting records. Okay, So that's the answer which can be given. That's the answer which can be given. Okay. We also look at another question: are all operators of bus, minibus, and taxi liable to pay presumptive tax? The answer, in short, is that not all of them. Okay, some of them, the operators are informal sector, means that they are maybe under a company, they are under a company name, or they have formed a company. So a company is supposed to keep elaborate record. So those are not supposed to be under presumptive tax system. Okay, so now we look at also what type of table can assist us to calculate the presumptive tax for transport operators. What type of table can assist us in this particular regard? We have this to say there is a table in the exam which will be given in this manner, in this way. You have a table that you need to look up to, okay, which is categorized as into two columns. One, we have type of vehicles showing you the seating capacity, and the second column, it is the amount of tax per vehicle per annum. So for buses, okay, those that have 64 seater and above, those are which are 64 seater and above, the presumptive tax, the fixed amount per annum is 12,960 Zambian kwacha. So if you divide that one by 12 to give you the monthly presumptive tax, which is very small, okay, very affordable, it's cash flow friendly, as we have been saying. Similarly, for those that are between 50 to 63 seater, them are supposed to pay 10,800. Okay, and it goes on by row. We can see that at the bottom there, the bottom row is talking about below 12 seater, which includes taxis. These are supposed to pay only 1,080 kwacha per annum. So these are cash flow friendly figures which would not warrant somebody to avoid tax. Okay, so in an exam, what you need to look at, you have to be in a position to recognize what type of transport, what type of vehicle is used in business. The examiner should be in a position to give you a clue of what is the seating capacity of that particular vehicle. And then once you know the seating capacity, then you just come to the table and indicate where this particular vehicle falls for the purpose of paying presumptive tax. And this presumptive tax is paid per vehicle. Okay, the emphasis is per vehicle. So you can have a fleet of buses with different seating capacities, means that the amount of tax per annum they are going to be paying will be different. So for the taxpayer, if you have a fleet of vehicles, at the end of the period, you just add up the presumptive tax for each vehicle to tell you what is the total presumptive tax you are supposed to pay to this particular revenue authority. Okay, so that's how it is. So we look at next in terms of how is this presumptive tax paid. Okay, now the payment is made simplified nowadays. There are a lot of facilities that are available through which you can pay. You can use the electronic platform. You can also visit revenue authority offices and make these particular payments. Okay, so there can be e-payments and so on and so forth. Okay, so that's what can happen. Okay, we move on to look at what is important to note in this particular case. Know that transporters should be encouraged to comply with the law by registering with presumptive tax at the nearest ZRI office. That's what ZRI wants. Okay. Then also, it's important to note that transporters are advised to pay the applicable presumptive tax regularly, preferably on a weekly or monthly basis, to avoid accumulating arrears and penalties. Okay. Also, transporters are required to get a tax clearance certificate from revenue authority as a prerequisite for obtaining a license for road transport and Road Transport and Safety Agency, RATSA. Okay, so before you go and register your vehicle for business, so it is a requirement that you pass through the Revenue Authority offices so that you are given a tax clearance form. So that tax clearance form ensures that the ZRA is comfortable, is satisfied that you don't owe them any arrears. Okay, you're in good standing with the Revenue Authority. If the new vehicle that you brought in, all customs and excise duty has been cleared and so on and so forth, that's when they give you a clearance certificate so that you proceed and register your vehicle with RATSA. Okay, that's what happens. Failure to make this consistent payment of tax within charge year actually will make you accumulate arrears and you pay interest and penalties and so on and so forth. Okay, so that's what you are advised to do. Okay. So now, having said that, we look at the other bit, which is turnover tax. Okay, turnover tax. Now we have talked about presumptive tax, and I've said it's to the exclusion of others and meant for transport operators. It's meant for transport operators. Those are the ones who are supposed to be subject to presumptive tax. So transport operators in the informal sector. Now, where does it leave the other players in the informal sector who are not in the transport business? These are subjected to turnover tax, or they can apply for turnover tax. Also, turnover tax is a direct tax on sales. As I've said, turnover simply means sales. For companies and other enterprises whose annual turnover is 800,000 kwacha and below. So that's what is turnover tax. That is what is turnover tax. So now, which persons are supposed to pay turnover tax? Okay, so the specification or the benchmarks we use is any person carrying on business with an annual turnover of 800,000 kwacha or below can be liable to turnover tax. Also, any person whose income consists of amounts which are subject to withholding tax, where withholding tax is the final tax. Okay, so that's what we are looking at in this particular case. So final tax, withholding tax, final tax means that this particular income is not subject to further taxation. Is not going to be subject to further taxation. Then we say that withholding tax is final tax. Okay, so that's what we have. And then we also need to look at who are the person who is not supposed to pay turnover tax. Of course, the flip side, we are going to say any person carrying on business where the annual turnover is over 800,000 kwacha is not supposed to pay or not supposed to be subject to turnover tax because he has crossed the threshold. And which threshold? 800,000 kwacha per annum in revenue. Okay? What of also this other one, that is any individual or partnership, as the Act says, carrying on business of public service vehicle for carriage of persons. Okay? And then any partnership carrying on business irrespective of whether annual turnover is over 800,000 kwacha or not. So when it is involving a partnership, then these are not liable to turnover tax. Also, income of partners arising from partnerships, the partnership producing that profit is excluded from turnover tax. Again, that's a follow-up to the previous statement which I've just made. Okay, and also you can say any person whose business earnings are subject to withholding tax, where withholding tax is the final tax. What is the flip side on what I've already mentioned? Okay, and any person running a business where the annual turnover is not over 800,000, but these are not, but is voluntarily registered for value added tax. That's the catch there. Voluntarily registered for value added tax. Then this person should not be liable to turnover tax. Finally, any person who is involved in mining operation, artisan miners, for instance, as provided under the Mines and Mineral Development Act, rather, are not supposed to be subject to turnover tax. So those are what the Act talks about as exemptions from turnover tax. Which persons or taxpayers are supposed to be exempt from paying turnover tax. We also look at how does turnover tax get paid. Okay, how does turnover tax get paid? So that's what we are going to demonstrate, so that we see how this particular tax is paid. It's by reference to a particular table. The table is given as follows, which gives us the bands. Okay, it gives us a guideline of how the turnover tax is supposed to be paid. Okay, here we have for instance monthly turnover category, which is the first column, and the turnover tax payable in kwacha in the second column. Okay, so you can see the first row is talking about if you get the monthly turnover falling in this bracket, then the second column is telling you how that will be taxed for turnover tax purposes. So you need to pay in that particular 100 kwacha per month plus 3% of an amount over and above 3,000 kwacha. It's supposed to be 3,000 kwacha. Okay, 3,000 kwacha. So that's what is given in that particular case. Okay, so if at all you find that the monthly sales are big enough to not fit in the first row but fit in the next column, next row rather, then it means that the turnover tax will be paid in a manner where you have 225 kwacha as 225 kwacha per month as more like a fixed amount, plus 3% of the difference between what is your monthly turnover and the 4,200 kwacha. So that is what happens. Okay, so what is the difference to that particular effect? That is what is subjected to 3% and added to 225. If at all the turnover is between the 8,300 and the 12,500, then you are supposed to pay a fixed amount of 400 per month plus the difference of the plus 3% of the difference of the monthly turnover between what your monthly turnover is and 8,300 kwacha. Okay, so that difference between your monthly turnover, which is falling in this bracket, and 8,300 kwacha is subject to 3%, then added to 400. That is what you're going to pay in the monthly turnover for that case. Again, if it falls in the next one, then you are going to do likewise. You look at the fixed amount, which is 575 kwacha per month, plus what your monthly turnover is, minus 12,500 kwacha. That difference is subjected to 3% and added to 575 kwacha. That will be your turnover tax. If it is between, as I've said, 16,500 and 20,800, then what is required is a fixed amount of 800 kwacha per month plus the 3% on the difference between what your monthly turnover falling in this bracket is and the 16,500. So that's what you add to 800 and you get the total turnover. In the event that the monthly turnover is above 20,000, then it falls in the last bracket where you expect to pay a fixed amount of 1,025 kwacha per month, and then 3% of the difference between that monthly turnover which is falling in this bracket and the 20,800. That difference, 20,800, and your monthly turnover which is falling in this one is subjected to 3% and then added to 1,025. So that's how you calculate your turnover. Any questions? Any questions?
No.
Okay. Okay, fair enough. Okay. So this is the table which will be given in the examination. So it will be part of your appendices to your exam paper. Okay, so this one, don't worry, you'll be given in an exam. It's a matter of knowing what to do at a particular time. So finding out what is your monthly average and find out which bracket or interval does it fall in. Okay, so normally in the exam you'll be given an annual figure of sales. When you are given an annual figure of sales, you have to convert it to find out what is the monthly sale by dividing that annual figure by 12 months, so that you know you now get the monthly sales. Once you get the monthly sales, that's what you are going to use to find out in which interval does it fall. Then you can be guided on how you are going to calculate the tax. So that's how it is done. Is that clear? So let's look at a number of points that need to be looked at in terms of turnover tax. One is that the amount of turnover tax is based on actual monthly turnover. Okay, the amount of turnover tax is based on actual monthly turnover. And also we should be mindful of the due date for this turnover tax. The due date is 14th day following the month to which the tax relates. So if you are dealing with October turnover, then you are given a grace period of 14 days up to 14th November to pay that tax. That's what that means. Then also taxpayer can make an election to pay turnover on a quarterly basis. Okay, instead of making payment on a monthly basis, if maybe the volume of transaction is not so much, you can elect to be making payments quarterly. So that's what it is talking about. Okay, then persons who are required to pay turnover tax are excluded from paying provisional tax. So if you are qualified to be paying turnover tax, you should not be paying provisional tax. In other year end, the person who pays turnover tax gets a repayment of withholding tax suffered in the tax year. Okay, tax already paid in form of withholding tax, which is deducted at source. You get refunded if you are under turnover tax bracket. Okay, so let's look at an example that can guide us on how this particular tax is paid, turnover tax. In this space, where I'm looking at Dununa Limited, is a small Zambian company that offers secretarial services to mining industry. The company expects its turnover to be 552,000 kwacha for the year ended 31st December 2022. Okay, let me use 2023, so that is current. Okay, and then the turnover is end evenly throughout the year. The turnover is end evenly throughout the year. Then the company also pays the debenture interest of 15,000 gross every year. Company. Then this debenture interest is subject to withholding tax at the rate of 15%. Okay. What are we required to do? To calculate the monthly amount of turnover tax paid by Dununa Limited. Okay, Dununa Limited. Okay. Then B, explain how the withholding tax on the debenture interest will be dealt with at the end of the tax year 2023. It was 2023 in this particular regard. 2023. Okay, so that's what we have. Okay, so so when you look at this particular task, we are being given a figure of 552,000 kwacha, and we are told this is for the year ended, means it's an annual figure. So as I said, when you look at this table, we don't have annual figure, we have monthly figures, meaning you have to convert this, you have to find what is the average per month of this amount, 552,000 kwacha. So 552,000 kwacha. You have to find the monthly average. Okay, that's the first thing you need to look at. Okay, so what do we do? You divide this 552,000 by 12 to find 46,000. find 46,000. This is an average monthly figure. So you use this 46,000 to check it in the table. Where does it fall? It's not in the first row, nor the second row, nor the third row, nor the fourth row or fifth row. It's in the last row where it says above 20,800. That's where 46,000 kwacha belong as a monthly turnover. So once we know that this is where it goes, we will go to look at how are we supposed to obtain the turnover tax. Thus, this guides us that there's supposed to be a 1,025 per month fixed. Then look at the 46,000, the difference between 46,000 and the 20,800, that you subject to 3%. Once you calculate that 3%, you add it to 1,025. That is what was done here. You can look at this. Okay, you can look at this. You see that there is 46,000. It falls in this category. And then when you come to calculate the turnover tax as guided, then there is this fixed figure, which is 1,025 kwacha. Then find 3% of the difference between the average figure of turnover, which is 46,000 per month on average, and the 20,800. So which is going to be 25,200, and find 3% of 25,200. You get it is going to be 756 kwacha. So you add it to the fixed amount, you are going to get a total of 1,781. Is that clear to everyone? Have you followed?
Can you just repeat what you said?
Okay. So in the example before us, we have been told that the company expects to make a turnover of 52,000 for the year ended 31st December. So for the year means that this figure is for 12 months period. Okay? So picking up from there, I've said that in this table that we are going to use to calculate the turnover tax, there is no annual figure, it's monthly figures. So how are we going to get the monthly figures if we are given an annual figure? To get the annual figure of monthly figure from this, you just divide this one by 12. So that's what has happened here. You divide 552,000 by 12 by multiplying by 1 over 12, the same as dividing this figure by 12. And you're going to end up having a 46,000 kwacha as an average monthly figure of the annual 552,000 kwacha figure. So once we have got the monthly figure, then we can use it to locate where this interval is supposed to fall. So you see that it's the 46,000 is greater than 20,800, means that it falls into this particular row, this one, where we are guided. If the figure falls in this row, then the turnover tax will be calculated as follows. Okay, so we use the fixed amount per month, which is 1,025. Then that difference between 46,000, if you look at this one, okay, draw it further. Okay, the difference between 46,000 and the 20,800, which comes to 25,200, is subjected to 3% calculation. You find 3% of the difference, which is 25,200, is going to give you 756 kwacha. Okay, then you just add it to the fixed amount of 1,025. You're going to get, in this case, 1,781 as the amount of turnover tax this particular Tununa Limited is supposed to pay. Am I clear?
Yes, no.
Okay, fine. So that's how you calculate that one. Then the part B, okay, we have been asked to explain how do we treat the withholding tax. Now, from the rules of the Income Tax Act, we have been told that if somebody is under presumptive tax, then withholding tax is claimed as a refund. So this figure, debenture interest, we are just coming from look at investment income. This figure of debenture interest is an investment income. It's subjected to withholding tax. Now, this withholding tax is a tax which is deducted at source. So when the money was paid, then the withholding tax was withheld and deducted from this and sent to Revenue Authority. So in this particular case, the person who is deducting withholding tax acts as an agent for Revenue Authority, and they collect that particular tax and send it over. So now the law says that if somebody is under turnover tax, then whatever you have paid under withholding tax, okay, is supposed to be refunded. So that's the treatment. That is the treatment. So whose amount is 15% of 15,000, which is gross. This is going to give you the figure of 2,250. 2,250. Okay. Then we have turnover tax, capital allowances, and losses. The interaction I promised to talk about. Okay, the interaction I promised to talk about. Remember that where a taxpayer of turnover tax has assets on which capital allowances are claimed, then those assets are written down notionally for the purpose of computing income tax value of such assets. Okay, what does that statement mean? It simply means that you are not going to claim capital allowances if you are subject to turnover tax, but you are going to calculate the capital allowances just for the purpose of writing down the value to the new written down value. But you are not going to use that capital allowance as a relief against your tax liability. It's going to be just a matter of reducing the income, the figure to a new level of written down value. Okay, that's why it is known as notional capital allowance. Notional because it's just in name only. You are not going to use it as a relief. Then the other thing is that the allowances calculated are not deducted from the turnover in arriving at the taxable amount. As I've said, it's a notional amount. It's not claimed as a relief. If a taxpayer has losses brought forward, these losses will be rolled forward, okay, to be set off against future profit of the same trade. So if you have losses in the same trade, then you are allowed under Revenue Income Tax Act to roll them forward to be offset against the same trade future profits. Then again, the other point to note is that they cannot be set off against turnover as where the business incur losses in that tax year has and has turnover of 800,000 or below. So you cannot set off losses against losses only when the business has made a profit and is an informal sector operating with income under the threshold of 800,000 kwacha. Okay, and this rolling forward is to a maximum of 5 years. Okay, after 5 years, you lose the claim of relief on that particular loss suffered. Okay. Then the other point you need to know is that such losses can only be relieved against the trading in the year when the trader is required to pay income tax on profit. So as an emphasis, you can only roll forward against future profits, not against future losses. That's what the point is talking about. And then the relief is restricted within a period of 5 years. That's an emphasis I've already mentioned. You cannot roll forward a loss beyond 5 years from the time it was suffered. So that's what you need to know about presumptive tax as well as turnover tax. There are these simple calculations that need to be taken on board, and if you find it in an exam, that should be an easy meet for you. Okay, if there are any questions, we are going to end here. Any questions? Any questions?
No, sir.
Okay, everyone is comfortable. Thank you for listening. Yes, please. Yes, please.
Yes, Lord.
What's your question? It is good. You are not audible. Your network is not okay. I can't get anything. Yeah? Okay, you can call us later, otherwise I mean to stop here. You can text me on my phone, then I'll be able to respond. Thank you for listening. Have a nice day.